Hello everyone. In my previous video, I have explained that a cash flow statement is prepared by a business firm in order to show the various inflows and outflows of cash and cash equivalent from three activities of a business. They are operating activities, investing activities, and financing activities. In this video, I will show you the complete cash flow statement and try to highlight the main features of this statement. This is the complete format of the cash flow statement in the indirect method. I will show you the clear view in parts after some time. Now, Accounting Standard 3 revised requires that cash flow must be divided into operating, investing, and financing activities. Net cash from operating activities is to be shown under Part A of the cash flow from operating activities. Part B shows cash flows from investing activities. Part C shows cash flows from financing activities. Now, if we add the total cash inflows or outflows from operating, investing, and financing activities, that is the sum total of part A, B, and C, will be net increase or decrease in cash and cash equivalent during the period. Now, if we add the opening balance of cash and bank balance of the year, it will give us the closing cash and cash equivalent at the end of the year. Let me explain you the format with an example. Here in this example, a firm has an opening balance of cash and bank, that is the closing balance of previous year, that is 31st December 2018, becomes the opening balance of the current year, that is for the year 2019. So the opening balance is rupees 10,000. But if we see the closing balance, that is the balance as at 31st December 2019, we can see that it is 15,000 rupees. This difference is due to inflows and outflows of cash and cash equivalent from either one or all the three activities of the business during the year. Now, let us assume that during the year 2019, due to cash sales of rupees 6,000 and payment made for salary and rent rupees 1,000 and 2,000 respectively, there is a net cash inflow of rupees 3,000 from operating activities. Now, this inflow of cash from operating activities will be shown in the cash flow statement under the head of cash flows from operating activities. This is a clear view of the cash flow statement. Since due to the shortage of space, I am showing it in parts. This is the format in the indirect method. Part A of the statement shows the details of operating activities. In my next video, I will show how to calculate cash flows from operating activities in details. In this video, I'm just trying to explain the concept of the format. So after the detailed calculation, the inflow or outflow will be shown as net cash. After the complete calculation, the net cash inflow or outflow from operating activities will be shown here. So according to the example, the inflow of cash will be shown as net cash from operating activities rupees 3,000. The example that I have showed you a while before. After the calculation, the detailed calculation, this net cash from operating activities, if there is an inflow, a net inflow of cash, a total net inflow of cash, then it will be shown as net cash from operating activities rupees 3,000. If there is an outflow, that means if it is in negative figure, it will be shown as net cash used in operating activities here. But here in our example, there is an inflow, a net inflow of cash of rupees 3,000. So it will be shown as net cash from operating activities rupees 3,000. Next, in the example, let us assume that due to purchase of machinery for rupees 1,01,000 under investing activities, there is an outflow of cash, and an inflow of cash of rupees 1 lakh was due to sale of furniture. Now, the net cash outflow from investing activities in this example would be 1,000, and this is a negative amount. Now, part B of the statement shows the cash inflows and outflows from investing activities. And after the detailed calculation, the net cash inflow or outflow will be shown as net cash from or used in investing activities. According to the example, the net cash used will be shown here as net cash used in investing activities rupees 1000. That is, after showing all the inflows and outflows from investing activities, the net amount, if it is a cash, it is in negative amount, then it will be shown as net cash used in investing activities. In our example, it will be 1000. It will be net cash used. That is after our detailed calculation from investing activities. Lastly, in our example, let us assume that under financing activities, there is an inflow of cash from issue of shares rupees 10,000 and an outflow of cash of rupees 7,000 for the payment of loan. So the net cash inflow from financing activities in this example is rupees 3,000. I hope it is clear now. It is 3,000. Part C of the statement shows the cash inflows and outflows from financing activities. And after the detailed presentation of the inflows and outflows of cash from financing activities, the net cash inflow or outflow from financing activities will be shown as net cash from, if it is a positive figure, or net cash used in financing activities if it is a negative figure. So in the example, the net cash inflow from financing activities of rupees 3,000 will be shown here as net cash from financing activities. In this example, if we add the net cash generated or used from operating, investing and financing, that is rupees 3,000 and a negative amount of rupees 1,000 and a positive amount of 3,000 for the year 2019, we get net increase in cash for the year 2019 rupees 5,000. I hope now it is clear. It is rupees 5,000. Now in the statement, the net increase or decrease in cash and cash equivalent from A plus B plus C activities, that is from operating, investing and financing activities, is shown after finding the net cash from or used in financing activities. So according to the example, the net increase in cash and cash equivalent will be shown as 5,000 out here after adding all the amounts of operating, investing and financing. So this 5,000 will be shown here as net increase in cash and cash equivalent from A plus B plus C activities. Now in our example, the opening balance of cash was rupees 10,000. As I have showed you at the beginning, that we are assuming that the opening balance of cash was rupees 10,000, which means the closing balance of cash and cash equivalent at the end of 2018, which becomes the opening balance for 2019. So the opening balance of cash and cash equivalent for 2019 in the example is rupees 10,000. Now in the statement, the opening cash and cash equivalent at the beginning of the year is added to the net increase or decrease in cash and cash equivalent of the current year. That means in our example, rupees 10,000, which is the opening cash and cash equivalent, will be added to rupees 5,000, which is a net increase in cash and cash equivalent for the year 2019. After adding the closing balance of cash in our example here, after adding 10,000, which is the opening balance of cash, and adding 5,000, which is the net increase in cash and cash equivalent for the year 2019, the closing balance of rupees 15,000 is found. So this 15,000 will be shown after adding the net increase in cash and cash equivalent, so in our example is 5,000, will be added to the opening balance of cash and cash equivalent, and then what we find is the closing balance of cash and cash equivalent at the end. So the statement actually shows the inflows and outflows of cash from operating, investing, and financing during a year, and then the opening balance of cash is added, and finally it arrives to the closing balance of cash and cash equivalent of the year. So it shows why there is a difference of cash at the beginning and at the end. In my next video, I will show you the details how to prepare the cash flow statement from operating activities, and then I will show you how to prepare the cash flow statement from investing activities and financing activities. Thank you.